Hi everybody, Tom Gile at the Gile Group. Hey, change always brings about a lot of questions and anxiety, and that's really true with what's going on in the housing market right now. So in today's Gile Report, we're going to take on some of those myths and misconceptions that are floating around out there right now in the housing market. Myth number one, the Fed is increasing mortgage rates. Last week, the Fed made an announcement that they're going to raise rates another 0.75%. Well, the Feds didn't raise mortgage rates. What the Fed did is raise the federal funds rate. And this is a rate that banks charge each other for short-term loans, overnight loans. Mortgage rates tend to follow the 10-year T-bill rate, which is a longer-term investment. And why is this important? Well, the federal funds rate does not directly correlate to what's going on, and any changes to the federal funds rate doesn't mean that there's going to be a corresponding change to mortgage rates. In fact, what we've seen the last couple of increases by the Fed, the opposite has been true. And this is going to lead us to myth number two. Interest rates are just continuing to climb. Actually, the reality of the situation is interest rates topped out about mid-June at about, they're around 6.25%, 6.5%, and have been on the decline ever since. Last week, after the Fed made their announcement of raising the federal funds rate, interest rates, mortgage rates continue to decline, and they're at about 5.3%. We're down actually about 0.75 point from where we're at in June. So now let's talk about myth number three. I'm going to wait for prices to come down before I buy. You know, I hear this quite a bit. And really, it's a gamble, and you're rolling the dice if this is what you're thinking. And Tabitha Maraza here from Mortgage Bank of California really sums it up well with this quote. I love it. If you're waiting for prices to suddenly plummet to what they were in the past, you're making a mistake. The Fed has promised another interest rate boost. If you're ready to buy, don't wait because prices haven't headed dramatically downward to what your parents paid. Things might dip a bit, but there's no cliff dive that's going to happen. And Tabitha really sums it up. And I think what's important to put into perspective here, everything I'm reading, everything that's out there in the industry right now is that prices are going to continue to appreciate, just not at the levels that we've been seeing the last couple of years. We're expecting prices to continue to go up, to 3 to 5% a year in the foreseeable future. I mean, clear out into 2025, 2026. So what's Tom's take? Okay, so first of all, just remember, headlines are meant to terrify, not to clarify. We're in a changing market right now, and it's more important than ever to really get the facts. Buying and selling a home is a personal decision with many considerations, so these are things that you're going to need to think about. Trying to time the market or predict what was going to happen next year is not a good strategy. Instead, consider what the home really means to you, and this is going to help you make your decision, whether you're going to buy now or whether you're going to wait. If you love the home in the neighborhood and it fits your budget, then it's probably right for you and you should probably make a move. While no house is perfect, don't make too many sacrifices just to get in a home. There's more inventory now and there's more options than what we've seen in the past. And last of all, waiting will most likely continue to cost you money, as we've looked at here with home appreciations. And I want you to remember one last thing. If you finance a home now, you can always refinance later if mortgage rates come down. Have questions on your home or maybe the buying and selling process, or just want to talk a little bit more about the current market? Give me a call, shoot us an email at askgilegroup@gilegroup.com, or follow us on social media. We'd love to hear from you.